Welcome back to Traders Corner, Summit's real-time, real money trading portfolio. As always, I'm joined by Garth McKenzie, who is founder and editor of Traders Corner. Garth, welcome.
Hi.
Garth, it's been quite a busy week. We had futures close out last week, and we'll get to that in a moment. But let's start off with one of the most recent trades, and that was Woolworths, which actually looked like it did quite nicely for you. Have you closed out that position now?
Yeah, I have closed it out. It worked out very nicely. So we put it on last week Tuesday, and we closed it out within a couple of days. It hit the price target. So if we have a look, the graph of it is up on the screen at the moment. What I'd identified on the longer term chart, and when I talk about longer term, this is going back 1 year, what I'd identified was that we had an uptrend over there, and the stock had pulled back to test that uptrend support at about 48 Rand 50, and I felt that there was a nice opportunity to buy since that support level was holding. And if we zoom in on that chart, now we look back on the last 3 months worth of trading action, what I also noticed was that we've got that uptrend there, which I'd just spoken about, but what we also had there was what looked like a bull flag type formation, and you can see why we call it a bull flag, because it looks a little bit like a flag in the way that it forms. And those typically are bullish patterns within an uptrend, and they usually break out in the direction of the trend, which in this case was upward. So we saw that breakout, and that was what we did for last week's show. We bought at 49 Rand 70. We bought for the portfolio. We used a stop loss at 48 Rand 60. We bought 3,200 CFDs here for the portfolio. And I said at the time that my profit objective would be that dotted line along the top where there's an area of overhead resistance. And it got there within a few days, and it worked out very nicely. So I sold out at 51 Rand 50, which was the target level that we had set, and locked in a nice profit there, 4,800 Rand after all costs were taken into account. So all round a good trade. A
very good trade, although slightly lower than where it actually closed. Didn't it actually close at a record, I think, above 52 Rand?
It got a little bit higher. It's been up above 52. But remember, our objective was always to sell it out at 51.50.
Yeah.
You're very lucky if you get the exact tops and bottoms. So I'm happy. I got most of the move in that rally. I'm happy to take that.
And as you say, not a bad profit for a couple of days trading.
Yep.
What about the put spread structure? That's something that you'd been building up to over a period of months, and in fact it seems as if the second leg of the trade, which was a futures contract that you bought, was actually what benefited you in the end.
It was absolutely what benefited us. I've just got the one slide of this today, and really it just shows the payoff of this put spread structure. But very briefly, what we did was we were long a put option with a strike of 30,000 and short a put option with a strike of 28,000. And then when the market fell and we got down to the recent lows, I bought one top 40 future to delta hedge this structure. And I did that at around about 29,000. So it changed the shape of the put spread structure to what we have there on the screen now. And you can see that we had from 30,000, whether the market went up or down, we pretty much had a V-shaped payoff. And it turned out that the closeout was where that orange line is, the dotted line, was at 30,690. So overall, we made a profit of 15,306 Rand on this structure. So it worked out very nicely. I think for viewers who are interested in looking at how this thing was constructed, the show on the 15th of May, we went into detail on how that worked out. So you can go and pick up the video file on this, either the Summit TV website or on traderscorner.co.za, and all the previous episodes of Traders Corner are there. So you can pick up that show on the 15th of May and have a look at how this thing was actually constructed.
Because for the more sophisticated trader, it worked out as a very good insurance against either the market tumbling or the market rallying above 31,000.
Yeah.
So, as you said, there was a V-shaped payoff, and you were insured against either eventuality.
Correct, yeah. The only disaster would have been if we had seen a crash down below 27,000, but that was quite unlikely at the time. So it was a good trade, and this is the second of these put spread structures that we've done this year, and both of them have actually worked out quite nicely.
Garth, before we get on to this week's trade, what did you make of last week's futures closeout? It seemed to be very, very active, and also it seemed as if the rally that's preceded it was maybe somewhat overbaked, and I heard a couple of commentators talking about gamma moves. I don't know what that is, but perhaps you can explain it, and actually how it worked out in the end.
Yeah, I mean, look, without going into too much of the intricacies, the week of the futures closeout was fairly strong, and we saw the market rally up to test the top of the recent trading range that we've been at, and then after the futures closeout, it pretty much fell away after that. So certainly it did seem like things were kept up. But you know, we're also not in isolation here in South Africa. We obviously are subject to what happens on the rest of the world's markets as well, and we just so happen to see the rest of the world's markets coming down after our futures close out as well, so maybe a little bit of a coincidence there.
Okay, so taking us on to this week's trade, it's a gold share, surprise, we haven't traded one of those for a while. Tell us why you're looking at Gold Fields.
Yeah, okay, well, I've got the longer term graph of Gold Fields on the screen at the moment. When I say longer term, I'm talking about a 1 year graph there. And what you can see is that green line that goes through the chart is the 50-day moving average. So Gold Fields had been a very, very weak performer the whole of this year, up until about April, May. And then we saw the gold shares bottoming out, and they had quite a strong rally into May and early June. Now, over the last couple of weeks or so, we've actually seen a retracement of that rally. And you can see the stochastic oscillator on the top there is rather oversold. And we've seen the stock pull back to now test that 50-day moving average, which is at about 106 Rand. And it seems to so far have held that support level. So I'm looking at the gold shares here because I think they do probably present an opportunity if we believe that this trend has changed. This is the first pullback that we've seen and possibly what is a new uptrend. So I'd like to get on board here. If I zoom in on that area where there's a rectangle over there, that's the last 2 months of trading action. Let's just have a look at what that looks like, because I see a couple of things here. The first, I've put what are called a whole series of Fibonacci retracements on here. Now, Fibonacci numbers are evident in nature, and I'm not going to go into the intricacies of it. If anybody's interested, there's lots of literature written about Fibonacci analysis. But essentially, those,
including novels like Dan Brown's.
it's interesting. It is interesting stuff, and it does seem to, the Fibonacci analysis does seem to work in the stock market sometimes. And I've picked up that there's a Fibonacci ratio here that we seem to have hit. So if you have a look, that rally that we had from the low in May to the recent high at the beginning of June, we've now retraced 61.8% of that entire rally. Okay. What's also interesting here is that if you look there at late May, actually the 24th of May, there was a gap in the chart of Gold Fields. Now, gaps occur where there's no trading action in an area. If you think about it, the stock market is open for 8 hours of the day, and it means that it's therefore closed for 16 hours of the day. And overnight things can happen, and when our market reopens the next morning, stocks need to reprice for whatever happened overnight. And stocks like Gold Fields and Anglo Gold and Harmony, they're all listed in New York. So what you do tend to find is there are quite often gaps in these charts. But what you typically find is that gaps do tend to act as support or resistance when they eventually get closed. And we've noticed now over the last couple of days that that gap on Gold Fields has actually been closed. And it does appear to have acted as support, in addition to the fact that we've got that 61.8 Fibonacci retracement. And remember, on the previous slide we showed that we had the 50-day moving average also providing support at the same level. So I think it's safe to say that this 105, 106 Rand area on Gold Fields is quite a big support area. And in addition to the fact that it's now quite oversold.
I mean, you mentioned the 50-day moving average. Would you take a sort of a Fibonacci sequence like this in isolation, or would you need a few other technical pointers to make you more confident of the trade?
Yeah, I mean, all these things are what I refer to as tools, and you want to try and get as many of these tools or these indicators to line up as possible. So you never should use one indicator in isolation, like a Fibonacci retracement or a stochastic or anything. Never use any one of them in isolation. You know, what I talk about on my high probability trading course is that it's a little bit like playing golf. You know, you've got a series of different clubs to do different things. You can't use one club to play an entire round of golf. And it's a little bit similar with trading. You need to use all your tools, and different tools do different things, and you need to try and get as many of these indicators to line up as you possibly can. So in this case, we've got quite a few of them lining up. As I said, we've got the 50-day moving average providing support. We've got a Fibonacci 61.8% retracement. We've got a gap that has been closed now. The stochastic is very oversold.
And any fundamental reasons?
Well, I guess you could say that the Rand price of gold is still holding up reasonably strong, given that the Rand has been quite weak. So I've, for a while, felt like we might see the gold shares outperforming in the second half of this year. So if that analysis and that belief is right, then this might be we've started to see a rally. This is maybe the first retracement in what might be another leg higher. I might be wrong, and that's why we always have a risk management strategy and a stop loss in place. But to me, this certainly warrants executing a trade here.
So you have actually entered into a trade?
I have entered a trade. I've gone long today at 108 Rand and 50 cents with a stop loss at 103 Rand. Subscribers to Traders Corner website will have seen this analysis on the website today, and also will have received an SMS alert to let them know that we were entering this trade.
Okay, so can you flesh out the mechanics of that a little bit?
All right, so if we go into the mechanics, we bought it at 108 Rand 50 as I mentioned. The stop loss is 103 Rand. That means we're risking 5 Rand 50 per share. The target in this case is 120 Rand.
That's quite specific. I mean,
it's quite specific. Yeah, well, it's the 200-day moving average, and it's also a series of other previous pivot resistance levels. So that'll be the first target. We'll see if and when it gets there whether we want to take all the profits or not, or maybe run some of it, but we'll decide later on. But for the time being, that's our initial target. I'm risking 1.5% of our account here, so that given that our account's sitting at about 360,000 Rand now, 1.5% of that is 5,400 Rand. So as we always do, we take the portfolio risk and we divide it by the risk per share. It gives us a figure of 981 shares. So in this case, I'm going to round it up. I'm going to do 1,000 CFDs for our portfolio. And I've included an extra line this week in the mechanics here, the risk to reward ratio. And I think it's quite an interesting and quite an important thing that traders should always look at, because you need to make sure that your risk to reward ratio makes sense on a trade. So in this case, we're risking 1, but our potential reward is 2.09. So basically 2 to 1. So that's fair. I think anything above a 2 to 1 risk reward ratio is okay, but obviously you want to try and get it even better than that if you can.
I mean, you've quite frequently in the past talked about a 3 to 1 risk reward ratio. That seems to be sort of your happy medium.
Yeah, I think if you can get 3 to 1, that's great, and if you can get more than 3 to 1, even better.
Sure.
But in this case, given where we've put our stop loss and given where the projected target is, it works out at approximately a 2 to 1 ratio.
And risking 1.5% of our trading capital, that's slightly less than the 2% you might take on a sort of high probability trade. Yes. Any particular reason behind that, or just the fact that you have a number of, how many open trades actually
do you have? We do. Let's have a look at the portfolio quickly, because we've got a couple of open trades. The reason, I suppose, for doing only 1.5% risk on Gold Fields is that we do have some exposure to gold in the form of the new gold contract that we've still got open there, which is working on my nerves, to be honest, because it's taking a very long time to come to fruition. But we're on the right side of that trade, but it's not really moving much in our favor at the moment. But there's the portfolio. We've got Gold Fields, we've just discussed it. The Woolworths trade we've closed out for a profit of 4,800 Rand. New Gold, we're still sitting long there, and we've got a mark-to-market profit of 2,800 Rand. And then a couple of other trades. Exxaro, we took profits. Then our put spread structure and that one Aussie 40 future, we've closed all of that out now, and we're still running half a position on Naspers, which we've had on for quite a long time. So all in all, that portfolio is sitting on just over 360,000 Rand. So we're up 44% for the year to date, which is great.
Which is fantastic, yeah. Garth, and just to end off with the upcoming courses.
Yeah, so the next course that I'm running is on the 7th of July. I've had a lot of interest. There's only about 5 places left for this course now, so slowly but surely filling up. I've had a lot of requests from other parts of the country to know when there'll be other courses. I will add additional courses probably in August and September in other regions around the country. So we'll notify you on this show once those dates have been set.
And obviously people can get hold of you there, your numerous social media
Yes,
sites.
That's right. Yeah, so you can email me, garth@traderscorner.co.za, or you can find me on Twitter, and you can also find Traders Corner on Facebook now as well.
Find you and like you on Facebook.
Go and like it. Yeah.
Garth, we have to leave it there. Thanks very much as always. That's Garth McKenzie, the founder and editor of Traders Corner.